Welcome to The Explainer. Look, if you've been keeping an eye on the Asian markets lately, you probably noticed one number that just completely stood out from the pack: 12%. That's right, that is how much SK Hynix jumped in a single trading session. And let me tell you, for a mega-cap company of that size, a 12% single-day surge isn't just a little bounce. That is a massive statement. But, what actually caused it?
$29 billion. Yeah, you heard that right. The absolute trigger for this incredible market surge was a record-shattering buyback. In fact, we are talking about the largest stock buyback ever announced by a South Korean company. It's a staggering figure, for sure. But as focused learners, we really have to look past that initial shock value and ask the core question here. Is this massive capital move a genuine buying opportunity? Or, is it just a really shiny headline trap?
And that brings us to the official title of today's explainer: SK Hynix, the $29 billion buyback, and AI market signal. My goal today is to break down exactly what this means using the raw data from our sources. No bias, no wild speculation, just the facts translated into a clear, structured look at a major market event so you can really understand the mechanics at play here.
Okay, let's dive into this. Here's our roadmap for today's explainer. We'll start with the $29 billion signal, then how the buyback works, move on to what the experts say, cover the risks and market context, and wrap it all up with the bottom line.
Section 1, the $29 billion signal, breaking down the historic announcement.
All right, let's break down the sheer scale of what the board actually just approved here. We are talking about 40 trillion won, which translates to roughly 28.6 billion US dollars. This massive capital allocation covers 24 million individual shares. Just to put that into perspective, that represents roughly 3.3% of all outstanding stock in the entire company. That is a highly significant chunk of ownership being taken right off the table. But how exactly does taking it off the table work?
Section 2, how the buyback works, the mechanics behind the market move.
Understanding this requires looking at an absolutely critical definition: share cancellation. See, SK Hynix isn't just buying these shares and passively holding them in their treasury. No, they are permanently removing these repurchased shares from circulation. And why does this matter so much for existing shareholders? Because it permanently reduces the total share count, which instantly boosts earnings per share, or EPS. Think of it like this: the corporate pie is getting sliced into fewer pieces, meaning every remaining slice, every share you hold, is suddenly worth a bigger chunk of the company's profits.
And this brilliantly illustrates the larger shift in their corporate philosophy. Under their old policy, shareholder returns were capped at up to 50% of free cash flow. Now, look at the new policy for the 2025 to 2027 window. More than 50% of free cash flow returned to shareholders. The ceiling has been completely removed. It's a massive, uncapped commitment to returning capital to investors.
What's really striking here is the aggressive speed of this timeline. Management didn't just make some vague promise for the distant future, they started buying immediately. The program is actively running right now, and they expect to actually complete this initial massive buyback by November 19th. That immediate swift action totally sets the stage for the new, elevated 2025 to 2027 shareholder return window we just talked about. I mean, they are moving incredibly fast.
Section 3, what the experts say, Wall Street's reaction. Now, what's really interesting about this is the sheer scale of the upside being projected by the heavyweights. On one side, JPMorgan's analyst Jay Kwan basically called this a game changer. They estimate SK Hynix could deliver a mind-blowing 180 trillion won, that's $130 billion, in additional returns through 2027. That would be roughly 16% of the company's current market cap returned directly to shareholders. Contrast that with Goldman Sachs, who approached it by upgrading their earnings forecasts, maintaining a buy rating with a target of 3.5 million Korean won. Crucially, Goldman shifted their valuation model from focusing on the company's baseline assets, price to book, to their future profit generation, price to earnings. That shift signals they truly believe we are entering a higher-for-longer storage cycle.
But, to really understand this bullishness, we have to zoom out and look at the wider context. 40%. That is how much SK Hynix stock is still down from its June peak. Why? Primarily due to market fears of an AI spending slowdown. So you have a stock that's taken a massive 40% hit, and management steps in with this record-breaking buyback. It's effectively management pushing back against the prevailing narrative, literally saying to the market, we disagree with your fear. We see tremendous value right here, right now.
And importantly, SK Hynix is not acting in an isolated bubble here. Their biggest competitor, Samsung, is reportedly planning a massive $72 billion program of its own. This management pushback against the AI slowdown narrative is spreading like wildfire. It's signaling a massive sector-wide shift where these memory giants are flexing their cash flows to aggressively defend their valuations and reassure the market.
Section 4. Risks and Market Context, Weighing the Potential Downsides.
Okay, let's carefully walk through the 4 key risk factors because we can't ignore the bear case. First up, the AI demand cycle. SK Hynix is the absolute leader in HBM memory, which is highly dependent on Nvidia and broader AI capital expenditures. If that demand dips, the narrative changes super fast. Second is execution risk. Remember, this incredible buyback is completely funded by free cash flow. If their margins compress or revenues dip, the funding for this whole program could be threatened. Third, sector correlation. Moving in lockstep with Samsung is great when things are looking up, but if one stumbles, they both could drag the sector down. And finally, is it priced in? We started this explainer noting the stock already surged 12%. Some of the immediate upside from this news might already be baked into the price, meaning the entry point for short-term traders really matters.
Section 5. The bottom line. Actionable takeaways for investors.
So the crucial point is how you categorize yourself as an investor. If you're a long-term holder, the data heavily suggests viewing this as a clear signal of management confidence, a real transformation from a cyclical memory play into a cash generation machine with very strong AI tailwinds. If you're a new investor looking at this, the buyback definitely provides a floor, but the stock remains volatile. So considering dollar-cost averaging might be a much safer approach than a lump-sum entry. And for the traders out there, you want to carefully watch momentum as sentiment improves, specifically keeping an eye on that 3.5 million Korean won Goldman target price, because that could absolutely act as a near-term resistance level.
Which brings us to this incredibly bold quote from JPMorgan's analysis: "The worst is behind us." I mean, it's a powerful statement in the face of recent market fears. But with a $29 billion commitment literally sitting on the table, it is abundantly clear that SK Hynix's management completely agrees with that assessment.
So that leaves us with the most important question for you, the focused learner. Based on the historic buyback, the uncapped shareholder returns, the analyst projections, and of course, the very real market risks we just explored, what's your take on SK Hynix? Is this a clear buy, a solid hold, or are you just going to wait and see how the AI demand cycle plays out? Apply what we've covered today and let me know your strategy in the comments. Thanks so much for joining me for this explainer, and I will catch you in the next one.